Hello everybody, I'm John with JP Strategic Investments, and today I want to take a look at Rocket Company's stock movement today and what I think is really driving this movement. I also put a poll on Twitter, so if any of you guys are Rocket shareholders, which most of you probably are if you're watching this video, take a look at the poll. It'll be down in the description of the video. Just kind of want to get a feel for why you guys are actually investing in Rocket stock and what your goals are for the stock. So with that said, let's take a look at the stock here. Obviously it's up over 7% today, and actually if you guys haven't seen it, it's up about 3.8% after hours as well. So above the $22 mark. So pretty significant move for the stock, and what I think is really driving this movement is actually what's called a gamma squeeze. And part of that is in relation to options, or a lot of that is in relation to options. So if you don't have a great understanding of options, this might go a little bit over your head, but I'll try and kind of break it down just so you guys can understand it. So right now, GameStop and AMC have been going crazy, and a lot of people think that might trickle over into other stocks like Rocket companies. Well, a lot of times in that case, investors will buy call options. And according to this article from Yahoo Finance here, call option volume is actually more than double its intraday average, or was double its intraday average today. We had over 203,000 call option contracts traded today compared to 18,000 on the put side. So that is a huge difference there. And I think a lot of that is in relation to this possible short squeeze that we could see trickle over into Rocket here. So how does this cause a gamma squeeze? Well, when investors buy a call option, usually the ones taking the other side of that bet, the ones selling the call option, are the institutions and hedge funds and other places like that. That means they don't want the stock to go up. You, buying a call option, want the stock to go up above whatever the strike price is of that option you bought. The institutions want exactly the opposite, and one of the things that they will do to hedge their position if they're selling a lot of call options is buy shares. Well, this buying of shares, if there's enough buying going on, can actually push the stock up significantly, as we saw today. Now, one of the things we have to keep in mind is the institutions are still selling these options, right? And so if the stock has gone up, generally that's bad for them. And so if we take a look at these options here, if we go to Robinhood, the most popular option, according to this article here, was the weekly 6/11/21 strike call. So if we take a look here at Robinhood, we're on expiring June 11th, which is this Friday. If we take a look at the volume here, 35,000 contracts were traded today. Now we can see here though that there's still about 8,500 contracts open at this strike. And actually, if we close this out and we go down to the $20 strike right here, that still has about 10,700 contracts open. So there's still a lot of contracts open around the $20 strike and around the $21 strike expiring this Friday. Now there's a concept that some of you guys may have heard about with options that's called max Payne. What max Payne is basically if you take this Friday, which is June 11th, the price at which the stock would have to close at on this Friday for most of the options that are expiring that Friday to expire worthless, that's max Payne. This means that that's the price that the stock would have to expire for the institutions to gain the most profit from the options that they have sold this week. Now you can actually track max Payne, and there's several websites to actually calculate max Payne for different stocks. One of them here, just Swaggy Stocks. If you look at their chart here, max Payne for this Friday is about 1950. So 1950, remember the stock is trading well above that right now. If you count after hours, the stock, let me just get rid of me on the screen here. The stock is about 2214, right? If you count the after hours movement, 3.89%. That means that the stock would have to drop over $2, over $2.50 just to get down to that max Payne level. Now, I'm not saying that it's going to, but the theory about max Payne is that stocks tend to move more towards their max Payne levels towards expiration Friday, right? And that's because the people that are really moving the stock and the people that can push the stock in one direction or the other are the people that have the money, which are the institutions and the hedge funds. So most likely this movement isn't really due to any fundamentals or anything like that. Anyway, this is my theory as what's happening with Rocket stock. We'll have to see over the next couple of days if the stock kind of drops back down towards that 1950 range. The $20 level is obviously a pretty strong support level, so that could kind of help Rocket stay above that, but we'll just have to see. Let me know in the comments below if you agree with my analysis or if you think something else is happening with Rocket stock. And as always, if you found this video helpful, don't forget to like and subscribe. Other than that, have a great day, and I'll see you next time.